Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. How is everyone doing today? Did you catch the momentum bars? If you did attempt to trade today, great momentum bars breaking out of that flag pattern, breaking below the levels we outlined this morning with momentum, which is the best kind of either upside or downside momentum. So wonderful because it makes the trading so much easier. Month end tomorrow. Do we have any potential bullish signs? We will look. That's why we're here to prep for tomorrow and for the Asian and European sessions. Good afternoon, Davey. Davey, did you literally wait? Because I hit go live and literally like 10 seconds after I hit go live, Davey's already in here. What do? You wait every day? Just your timing. How do you know so quickly, Davey? Hey, Patrick, good afternoon. Hey, Dan Jet. Geo with good afternoon with the dollar signs in it. Geo, did you catch the trade to the downside, George? Should call you George. Good afternoon, Sashi. Happy Tuesday. Watch the language there, Connor. Hey, it ain't easy. Changed my major from agriculture to finance because of this channel. Agriculture. What kind of agriculture were you studying? Hey, options 22. Good evening, Anissa. Bob's not here yet. We will see. Internal time clock. Davey's got the internal time clock. So let's see. We got consumer confidence. Consumer confidence bounce. Not surprising with inflation's even the subcomponent of inflation expectations coming in a bit. It was based off gas, like the last consumer confidence number with the other reporting agency, and this, the summer people are in a good mood. Let's watch that drop go into the fall. Inflation expectations will go back up. Consumer confidence will go back down. You heard it here first. Well, maybe you didn't hear it here first. Interesting though, market reacting to the JOLTS job openings higher, pretty substantial, higher than expected. So job openings keep increasing. Quits actually decreasing. So that gives fuel to the Fed fire. Can they hike more? Can they go longer? I mean, it's all insane. Fed services, Dallas Fed services, better than previous, but still in contraction. New orders and prices paid softening. Their prices paid softening is a good thing. ADP crude oil bill versus a expected draw, and we had Fed Williams speaking. Really, I mean, come on, man. Do we have to keep going? I retweeted somebody. I forgot who I retweeted, but somebody said, can't we just get a Fed spokesperson at this point? Do we have to hear them all the friggin' time, like every day? They don't have anything new to say. All right, Bob will be on in the morning tomorrow. Oh, great! Look, 7 a.m. More Fed speak. Yay for us! ADP employment numbers, Chicago PMI. Let's see if that's still an expansion. EIA numbers for all you get oil traders. And more Fed speaky after the market. Yay. Heat map, pretty red across the board. A little slight bounce going into this afternoon, but Tesla actually triggering that double right at that 50. I was waiting for it to close below the 50, right at the 50. Oil, pretty bloody day. Outside day reversal. No stop yet hit on that little double bottom, though. Came right down that 62.5. We'll take a look at that. FOMC. 72.5% for that 75 basis points, and still in negative gamma. We saw the negative gamma kicking in with some of that momentum today. After hours, HP gap down, miss. I actually wanted to look at that. Somebody remind me after you Bob on to pull up the HP chart. Wanted to talk about something with that. Hewlett Packard Enterprise though was pretty flat. Chewy, when I looked, was flat. I didn't see the results though yet. Tomorrow morning, uh, places I don't shop: Express and Chico Fast. So not really much going on for me tomorrow morning. With that, let's. Big thing to me is again on Thursday with Hormel and Campbell's. You either got the chili or the soup trade. Chili or the soup trade, and if you don't like chili, you got to trade the soup. That's a little just. I got a chuckle out of Bob with that. You know what? Just come on and subscribe already. There we go. I'm just bringing on Bob.
You want me to tell the soup trade story?
We've heard this. You can reiterate the soup trade story, but what if you don't like chili? Do you take the soup trade?
If there's anyone in here that hasn't heard the soup or the chili, actually, it was ketchup, Mike. It was
Okay.
Heinz.
Well, hey, you know what? Soup, ketchup. What's the difference?
It was funny because the Heinz trade was your only loser of like 9 in a row. The guy only took the Heinz trade. He had joined right. You had done like 9. You were like 8 for 9, and the Heinz was the only loser, and the Hormel was the largest winner of the 9. That's the funny part about that is I go back and look at it. And then after that, you got in Heinz again later, and I never really tell this part of the story. He's like, Heinz screwed me before, so I'm not getting in Heinz, and it was a winner. So
we don't know. We have the probabilities, right? Do we know which one's going to hit or which one's going to miss? You don't know.
Nope.
That's the interesting thing. And remember, I mean, we've talked about this before. Sometimes the best looking trades, the best looking setups, and you're like, this one's a slam dunk. Yep. Loser.
I love it.
Oh, boy. Let's see. George, short since Friday and rode the wave, took some profits off. Bob, what are you watching for to confirm stagflation is a problem?
I'm watching for the market to always go up and never go down. Sorry, I just wanted to say that. So repeat the question. What am I looking for?
What are you watching for to confirm stagflation is a problem? Stagflation is a problem, period. But
yeah, so this is a great question worded poorly, Connor. Stagflation is a problem, period. There's no stagflation that is not a problem. I know that's not what you meant. But just, for the record, words matter, as they say all over the internet now. So stagflation is always a problem. I assume what you're saying is, what are you looking for to convince yourself or to confirm that stagflation exists? I would say, this is my definition, not a technical definition. I would say 4 consecutive quarters of 0.2 growth or less combined with inflation that's at least 1.5 times the Fed target. So the Fed target's 2% on inflation. 1.5 times means it's going to be 3.5% inflation or higher. And in terms of the 4 consecutive quarters, stagnant growth, I don't think you can really define as 1 or 2 quarters, my opinion. I guess if we were still going from the old technical definition of a recession, we'd say 2 quarters. But certainly 2 quarters can spin around pretty quickly to positive. And then did you really have stagflation? So I would say 4 consecutive quarters of 0.1 or 0.2 or worse on growth, because that would be pretty stagnant. It's probably higher than that in terms of growth. So, yeah. So that's it. Johnny is trying to get you going.
A very specific number, Bob.
Yeah, I just, when we have 0.3, 0.4, 0.5 GDP growth, those are usually in upswings. We don't usually sit there. It's either in an upswing or a downswing. So I would say that if we have consistently, what's the first number I said? 0.3 or less or 0.2 or less?
I think you said 0.2 or I don't. I fixated on 0.2.
I think I said 0.2. So I will go ahead and go get point. I would go with 0.2. Can I jump on something that Coco just put up?
Sure. Let me hold on 1 second. I got to say hello to Josh first, and hello to Lauren, and hey AB. Now we can what Coco? What did he just put up? Chewy got smoked.
Yeah. The reason I want to talk about that really quick is because I think that was very telling. People spend on their pets. The only time they don't spend excess on their pets is when their own food is at risk. So that's very telling to me that Chewy got smoked, and Chewy called the environment challenging, which I think is a pretty diplomatic way of saying that business sucks right now. So you buy beds, you buy toys. Mike has 3 or 4 dogs. I have a
Five,
dog, 5 dogs.
five.
You buy, I mean, you have to buy food to a certain degree. You don't even have to buy treats because you can use food as treats. You can use carrots as treats. But people buy treats, they buy toys, they buy beds, all this stuff, right? They buy maybe unnecessary vitamins and minerals, oils for their skin, all kinds of shit. Um, when a place like Chewy is actually missing that, I think, and not that they make every single one, but they're also guiding lower. They're saying that the economic times are challenging. If money being spent on pets is falling, it's very telling for sort of the middle class to even like upper poor, lower middle class that they're having to pull back on pet spending.
Well, have you seen the amount of pet surrenders going on too, just because of
No,
inflation now? It's horrible.
no, see that.
And I can't even take any more right now. I'm out of hands to walk them. So, although if there's ever an emergency, that's what I keep saying, and that's how I ended up with five.
Yeah.
Sterling, please tell me how it's legal. Yesterday at 2:42 p.m., there was a purchase of 50,000 $5 put contracts for 5.2 million in Nikola, and then they announced a 4 million share dilution offering this morning at 7:40 a.m. I'll tell you how it's possible. We don't have regulators anymore.
He asked how it's legal, right?
How
Or
it's
did he ask?
legal? Well, yeah. Well, we don't have regulators.
It's certainly legal to buy that many $5
Yeah.
calls. It was $5 calls, right?
The
It's just,
timing's really interesting, though.
yeah, if you can find proof that the timing was deliberate, then yeah, it's not legal. But in the way you described it, Sterling, it's perfectly
It's
legal.
legal. But there's no fear of regulators in this environment.
No.
Also, you make 100 million. You might, if they come after you, what do you pay $1 million fine?
That's the thing about it. I mean, that's what the pharma industry has worked on for years, right? I mean, they just pay the fine.
Yep.
They
Well,
do
that's even
crap.
what Wall Street does.
Yeah.
J.P. Morgan manipulating this, manipulating that. Oh, here's a $10 million fine. Oh, well, that's a drop in a bucket.
Mm.
Yeah. Until there's real, instead they go after the stupid stuff, and it's just a joke at this point. We don't have regulators, so it
Nope.
doesn't matter. You still got to do the right thing. Again, I would never condone doing anything like that, even without regulators, because you know what, karma sucks.
Yeah.
Uh, Agreed, George. After Powell spoke, the Fed should have mic dropped and gone away until the next hike. Bob, why do we have to have Fed speaks every day?
So a lot of these are pre-scheduled.
Yeah, but
So, for
really?
example, well, I mean, yes, really, I guess it's funny because a lot of like the John Williams speech today, it was a pre-scheduled Bloomberg interview.
I
I mean,
understand, but you know
I don't
what?
know. It's like
All right, go back 15 years. Would you literally have Fed speakers every day on the docket?
no, but 15 years ago we only had one financial channel, and 30 years ago we had none. So the interest in these things has skyrocketed. Look, I'm not saying it's a good thing for markets. It's certainly not. But the markets also weren't listening. They didn't listen to Powell, right? They fell the one day and then they immediately started to rebound overnight the next day. And, Neil Kashkari said he was happy to see the stock rout, right? Does that mean that if the stocks start coming back again, that he's going to go out there and go, you guys are knuckleheads, we're going to crush you? Yeah, I don't know. I mean, it's viewed as a tool. I think it's viewed as a tool. I really do. And I think that like as they've had these pre-scheduled speeches, they have Zoom meetings or they text each other or they WhatsApp each other. I don't know which. And they say, hey, make sure you continue to push the idea that we're going to tighten. John A. said he still thinks that the Fed will pause after September. Um, I I would doubt that they will pause and say that's it. Not with the current data. Okay, they may after 75, you'll have the target rate 300 to three and a quarter, right? So 3% to three and a quarter. There are analysts out there, very well-respected analysts, that say the Fed needs to get to 5. So my question is, if they stop hiking after September, and then January of next year they do another 50, did they pause? I mean, I guess they paused. What does that mean for us? Nothing. We're still looking at price action. So
They're not pausing after September.
yeah, I would think they would taper down the rate hikes rather than just stop them.
Yeah, they're not, probably the best case for the people wanting the rate cut would be a 50, then maybe 125, and then they'll go to reassessing.
Yeah.
I doubt they're going to do a 50 and just stop. Because what's their risk?
I mean, if they do a 50, to me, another one's coming.
What's their risk though? If they let's say they prematurely think they got inflation under control and it roars back up again, then not only do they screw it up on the way up, they screwed it up on the way down. What's the point of them being around?
Yeah.
Uh,
It's silly because, if keep in mind their target is 2%. That's their target. And they've talked about wanting, in prior meetings when they had reached slightly above 2% and then it had fallen back below and, so on and so forth. And then they talked about that adjusted average. Remember the adjusted average, Mike?
I remember the adjusted average.
Where you and I were joking about what the hell is an adjusted average, right? If you go and look, so even if they said they needed to, and they did say this, that they needed to let it run above 2% for quite some time because it had been below 2% for quite some time, right? You know how far back you have to go at this point to find a 2% CPI reading? Or less, I should say. You have to go to March of 2021. There's a 1.7. Then we had a 2.6, and it's been straight up ever since then. So granted, we'll have those numbers drop because of base effects, but they're not going to drop to 2.
No. Again, even if we had 0% inflation the rest of the year, you're still looking close to 6%.
Yep.
So, and 6% is nothing to, let's say, inflation's been tamed.
Yeah, it's nothing to sneeze at, that's for sure.
Especially, it looks like still wage inflation is starting to get entrenched.
Well, yeah, you and I have talked about this a lot on this particular live stream, Mike, that you don't take a raise back. The way you take a raise back is through a firing, a layoff,
or a laying off,
or a furlough. You say, hey, we don't have enough to pay you. And then maybe the person comes in and says, what if I take a pay cut? Which never happens. So that's how you get a pay raise. If it's something like, like in my brother's situation, for example, my brother, chicken prices at his restaurant more than doubled. Now they're coming off a little bit. If he chooses to, he can drop the price from where he was. He raised it and he could drop the price a little bit because the input of chicken has dropped a little bit. But his wages have risen 30%, the wages that he pays. So he probably won't do that. But from a perspective of wage expansion, you don't say, hey, everything's kind of toning down a little bit. So, that raise I gave you last year, I'm going to take it back and bring it back to where you were. Or, hey, I gave you a $5 an hour raise. I'm going to drop it back down by $2.50. It just doesn't happen.
Yeah. Let me get to one quick. How should we trade differently now that the indices are below the 50-day averages? You shouldn't, because the 50-day averages are just the reason they're on the chart, their key support and resistance points, is the only thing that's tested out. You don't trade, you use longer term signals and everything else. You don't just trade breaks or rallies above 50-day averages. It's not statistically or probability wise relevant enough to make trading decisions off of. I just wanted to lay that out there. Uh, Bob, real quick before I get to more questions, and we will get to more questions, what did you think about the Jolts job openings today? If you have any thoughts, with the job openings going up pretty big and the quits dropping.
Well, I mean, it's the start of what we've talked about, right? I mean, the jobs openings dropped and the quits rate dropped.
Jobs
There's
opening
something,
went up.
yeah, the jobs openings went up. The quits rate dropped. If this is an accurate reading, it should appear in labor force participation. That number should fall. So that's really all I read into that. The quits rate, that the quits rate is kind of weird because on the one hand, it measures theoretically how comfortable people are leaving their jobs because they feel like they can get a new job, right? But also, they need to know they're going to get a better job. So the quits rate falling could mean one of two things. It could mean jobs are satisfactory, like wages have gone up enough where the quits have dropped. It also could mean that the confidence of losing a job has dropped as well. I'm not sure about this JOLTS jobs opening numbers. There's multiple rumors of what goes on in that, along with companies posting fake jobs to try and drum up as many resumes as they can and to pick from. And you could see that being an actual thing during times when they were struggling to get the right employees. So I don't know. I'm skeptical of that number.
Patrick, thoughts? Wall Street Journal, the European Commission suggests emergency intervention for structural reform of electricity, short term first and longer term. Structural
Yeah.
reform and what they're floating, what price caps and everything else. It's going to be a disaster. Over. I'm sorry, it's going to be a disaster in Europe.
Yeah.
Plus your different energy use per EU member. And how does price caps work out in long term?
Price caps never work out. They restrict energy flow and they keep prices higher.
Yep. So it's just my thoughts are it's going to be a long dark winter in Europe, and a lot of businesses are going to get hit hard. It's going to be not positive. And we will. Here's my prediction: the pipeline will have an attack on it sometime once the weather turns colder, and it will be blamed on Ukraine.
Sure. Okay.
There's my prediction. You heard it here first.
There you go. Okay.
Let's see. Sterling. Will the Fed just indiscriminately dump bonds at the market as they start to unwind the balance sheet next month, or they actually try to get as much for them as possible? I thought they were just going to let things run off at a more accelerated pace.
They have a schedule. They're just letting things run off at a more accelerated pace. So what they have a schedule. I think the max is now like 40 something billion. The ones that are expiring, the proceeds will not be reinvested. So what that basically means is buyers of well, there's less buyers of those duration bonds out there because the Fed's not one of them. So less demand, prices fall, higher yields. That's what it's supposed to mean.
Hey, John, it seems like before the FOMC meeting comes, the Fed makes the market crash. So when the day comes, they don't need a lot for the market to react. How does the Fed make the market crash?
Yeah, you need to go back and look at a bunch of Fed meetings, John. It's actually been quite the opposite.
Yeah, but the Fed doesn't make the market crash. I mean, the market can crash due to increased selling or other geopolitical events or something unwinding, but the Fed doesn't make the market crash. The
Yeah.
market can react to stuff. I mean, the Fed doesn't sit there. Now they've tried to talk the market down, but that's very different than a market crash. And last Friday was not a market crash. It was a hefty reversal, but a market crash, you'll people throw around that term way too much.
They really
The
do.
market's crashing. No, it's down a couple percent. Yeah, momentum to the downside. But it was not a crash.
No.
When you start seeing the futures halted, we're talking, you're getting closer to a crash. All right? So start talking to me on days when the futures get halted. Why are food prices not dropping with wholesale prices? Is it a delay in passing on the lower prices? Example, wings doubled in price during pandemic from 2 to 4, now priced at 169.
That's lower than two.
Yeah, I'm confused, but I haven't seen a lot of food dropping passed on yet. I mean, food still at incredibly elevated prices, but a lot of firms have been able to pass on inflation directly to the consumer. I think that's going to be severely dialed back in the next few months. The amount that they'll be able to pass on, and they'll have to start passing on some savings longer term.
Yeah.
My thoughts. Bob, you can disagree if you.
No, I don't disagree at all. I mean, they'll pass some of the savings down, though. Remember, just because input prices have fallen, your comment still doesn't make sense, Paul. You said they went from 2 to 4, now they're 169. I don't understand that comparison. Is 2 to 4 retail? So you got to compare it to wholesale, not to retail. But we need to compare apples to apples here. But from a perspective of why things might not go down, again, labor costs have not gone down. Input costs, especially in something like a restaurant or a grocery store, is not just food. As a matter of fact, labor's a bigger cost than the cost of food. So, I mean, you can compare the direct wholesale cost versus the direct wholesale retail cost, and then where the wholesale cost went versus where the retail cost went, and compare the difference between those two. And the difference is probably labor, rent, electricity. And then there may actually be a little more profit cushion in there because companies don't know what's going on. So I'll use my brother as an example. This is not factual. I'm making this up. Okay. Let's say that 1 month chicken prices rose 10%. Okay. He's got last month's profits to buy the chicken with, right? This is last month's at the lower price. So chicken went up 10%. So he raises the price. The next month, a bunch of people come and ask for a raise. So he raises the price again. Then the chicken delivery comes and it's higher than it was. He's like, crap. Now he's got last month's money to buy it, where chicken was at the lower price and some of those profits went to pay the increased wage. They're always working on old sales to buy new inventory. So once the wholesale comes back down, you could understand why a business might keep a little cushion. They might try to build their cushion back up that got hit when prices went up surprisingly and they were working on old money to pay those costs. So that's kind of the issue. You think of it as like a rainy day fund, right? If you have a rainy day fund in your house, or you put 500 a month away in case your air conditioning breaks or your car breaks down or something. And then one day you have $3,800 that's in there, and 3,000 of it goes away on a new air conditioner unit. It'd be more than that. It'd be more like 7,000, but whatever. Let's say a compressor goes out, it's $3,000. Now you've got 800 left. You might actually up your savings to try and get back to that old level as quickly as you can in case something else breaks. I mean, businesses aren't run much different than most people should run their lives. I think the reason people don't understand this stuff is because most people don't run their lives that way.
Yeah, you said a key word in there, should.
Should.
Yes, John, after September, there won't be another FOMC till November. Correct.
Is my brother here today?
I don't know. I I haven't seen him in a couple of days. Very disappointed.
Oh,
At least he hasn't chimed in. You know, I want to see him chime in more when you're not here. So we can get more Bob stories. Yeah, the we have it September 21st and November 22nd. So, and then the 14th of December. So, I mean, sorry, November 2nd, right before the election. And then we have 14th of December. And then nothing until February. We're not sure if you saw my comment when I asked, do you think the market will crash when the 10-year bond goes back to 3.53?
No.
Crash? I think we can. I think we're going to be in a protracted decline. But again, crash is very specific, and an orderly unwind of the market. Could we unwind this market until 3,000 in the S&P? Yes, easily. Does that mean you have to crash to get there? No. Oh, I guess I'm tired of hearing the crash stuff.
I'm going to look something up while you're doing this.
Hey, Nas Industry, glad to have you. Yeah, 169 wholesale, not retail. And Paul, you're worried about your wings for football season. I did see that.
No, listen. I don't think that the market will crash if and when the 10-year gets above 350. I think it will be an orderly move down. It will have already moved down quite a bit on the way there. Just from a perspective, guys, I just pulled up the largest single day percentage changes in the S&P 500. Okay? You guys want to take a guess? These are single day, by the way. Okay, not multiple day.
The largest decline's got to be around 22%.
1987, October 19th, 20.4%.
All right, I was close.
The top three are 20%, 20.4, 12.3, and 11.9. And then there's a 10.1. And then there are multiple nines and eights. So what we've seen, we haven't seen a crash in this entire chart that's up here.
No, let me scroll back. There was no crash. There was no crash in all this.
It was a very orderly move down, actually. And actually, people just didn't believe that it was going to continue. Mike and I did. A lot of markets only go up. People didn't, but we did. So,
what's the lowest PE ratio you've ever seen? I don't know. I've seen it at like point something, like 0.1. It doesn't really matter because you can have a low PE ratio, and actually a low PE ratio isn't necessarily a buy because a low PE ratio can go back below zero and then there is no PE.
There's plenty of stocks with no PE.
It's one of the first things I look at, though, when some of these stocks that go up 15, 20% in a day. It's like, all right, we're still in that.
I assume he meant the S&P probably, but
you've had average PEs. Look back in the major bear markets decades ago, you had average PEs drop below 8.
Yeah.
I generally watch now in the more Nasdaq stuff below 15, and the S&P stuff below 12. I'll start really getting interested, not only from a fundamental standpoint but a technical standpoint. When we
get ready, I just pulled up the 90-year history of PEs, Mike.
90 years.
90 years. There was a 6.37 in 1949. There was a 6.5 in 1979. And then if you stick to basically the modern era, well, that's not what I wanted. Lowest in the modern era has been about, as Mike mentioned, it's been about just above 13, 13.01. That was 2011. So, but if you go back, like if you get rid of the period of time of the 2000s, like kind of look at from 1994 back, and I'm just eyeballing a median PE, and it was around where Mike said, 12 or 13.
Yeah, that's why it's literally on my radar screen, and I did a lot of research years ago on it, but that number's ingrained in my head, and I can't cite exactly why at this point, but that's the number.
The high in 2009, 122.3.
So,
You would think the high would have been in the tech bubble. It's not. It was a housing bubble. Anyway.
Bob, what do you think about the China crisis? Are we going to get affected?
Which crisis?
Uh,
I mean, COVID zero, there were a bunch of cities that reinstituted restrictions again. Stimulus doesn't seem to be working. Their GDP seems to be headed in only one
Real
direction.
estate?
Real estate, the ghost cities are getting more ghosty.
They're starting to tear down some of that stuff they built.
They're going to rebuild it, is the thing. That's honestly my guess.
No, they will.
Because,
they'll tear it down and rebuild it.
They'll rebuild it. And they'll use the excuse that they're making it more attractive to attract residents. But they'll pay to tear it down and then pay to rebuild it. And both of those things will theoretically stimulate the economy. And then also another crisis, Taiwan shot warning missiles at a Chinese drone. So I guess it's a matter of which crisis. If you're asking if it's going to affect the global economy, yes, which means it's going to affect us. It already kind of is if you look at copper. Copper was making a run based on China's stimulus, turned around today. It's been the last 2 days going lower, back to the bottom of the short-term channel there. So yeah, it's going to affect us. It'll bleed in slowly. Their banking crisis probably wouldn't affect us that much, though. Maybe on the periphery, it would help the XLF go lower because there are definitely some exposure to China and some of the too big to fail banks. But they've been slowly kind of cutting that exposure. So the longer that China hangs on, the less likely it is to affect our banking system.
Paul noticed the layoffs are starting now that we are in a recession. I don't know if we're technically in a recession just yet. Snap just announced 20K layoffs, I believe. Should we expect this to snowball?
I would say yes, we expect it to snowball. And I would also Paul, if people try and pull you into an argument as to whether we're in a recession or not, basically you tell them you don't give a shit if we are or not. Things are either good or they're bad, right? And you have, if you're investing based on price action, then you won't really care. I already said that I talked about this before. 46% of the time, stocks actually rose during the recession. 84.6% of the time, going back to 1945, stocks were up a year after the recession ended. So who cares? Again, the only time it was different, okay, 84.6 it went up, right? 15.4%, it wasn't up a year later. That 15.4% of the time, the vast majority of those times, inflation was high. So that's really when somebody says, do you think we're in a recession or not? You should say recession doesn't matter. I'm worried about stagflation. That should always be your answer.
Now you can go on TV like Bob.
Right? That's what I said yesterday on Bloomberg.
See? You're getting coached. Now you can line up your TV spots. So I'm never good at repeating the lines, so that's why I stink at that kind of stuff.
You're good. You're fine.
We're losing any respect we have in the world at this point. You can see it most recently with India now getting in bed with Russia, including military exercises. We're in trouble, Sterling thinks.
Oh, Sterling's always trying to draw me into politics, and it always works. It works every time. Yeah, look, honestly, I think India is doing a smart thing for themselves theoretically. But Germany did it. Didn't work out for them. So we'll see.
Oh, boy. John says, thank you, Bob. Paul says, thanks, guys. I think we've had some good discussions. Any thought? I have a question. Any thought on the crude pullback from anything you're looking at?
Yeah, I thought the crude pullback was interesting. So two things on that. OPEC real world data came out for the month of August. And a lot of market participants thought that the fighting going on in Iraq was going to affect Iraq's participation in production, and it didn't. So I think that was a bigger part of this move than people talk about or people want to talk about. The Iran deal is still kind of crawling toward the finish line. And I think the market is fighting several demand threats across the country, as we saw Germany's inflation higher than expected. EU consumer confidence, I believe, missed as well. And the like serious talk of the ECB doing 75 basis points and doing QT and basically saying recession be damned. Those are demand, those kind of crap on demand, overall. So I think that's what that was. I think that was people just kind of getting out. Also, the equity market started accelerating lower. They were up substantially last night. Mike, I don't know if you looked at them. They were up over 1% in the Nasdaq. And then they started to come off. They were still up this morning and they started to come off. They accelerated to the downside with Bloomberg reporting the China-Taiwan stuff. Now, crude oil didn't really, but we're not seeing gold participate in the rally either. So it's not a financial flight to safety. I'm sorry, it's not a geopolitical flight to safety. You're already seeing gold participate. So I suspect that it's a combination of those things all at once, where everybody kind of thought they could get out of some of their crude oil longs. Who asked me? Somebody asked me. I don't know if it was here or somewhere else. I said that I had turned. I was bearish crude oil, and now I've turned bearish neutral. Bearish is almost leaving my vocabulary here. Almost. Not quite there yet, but we'll see over the next day or two. You can see the rotation zone turning up and that sort of sloppy double triggering, and I just don't love it anymore.
So do you think the ECB is finally getting serious? I've been seeing that, they're really stressing that. Are they actually going to do this?
I don't know if they'll do both 75 and QT, but I suspect they want to make a splash. Look, they know as well as anybody else that, the ECB is interesting because the ECB, and I've been having this argument with actually the guy who was my boss when I first started as a strategist. When I was the assistant market strategist at Nikko Securities, my boss was a guy named Todd Kobayashi. And we've been going back and forth, and he keeps saying it's not politically prudent for the ECB to do what the rumors are. And I said, man, this stuff's leaking for a reason. And in the past, I've seen the ECB kind of buck the trend, kind of with a politics be damned kind of a view of things. They were slow to the party to raise rates, and I think they might. I think these leaks are coming from somewhere. So I think they might. I don't know. We'll see. It's 2 weeks away. Yeah, I mean, it's this week and then one more.
Final thing, any thoughts on Taiwan shooting at the Chinese drone?
No, I can't really do that kind of strategy anymore. I don't look at it. I used to do it for an oil company, geopolitical strategy, but I suspect it's the kind of thing that they felt. Like at the end of the day, I don't think anybody wants an escalation between the U.S. and China, including China, probably least of all China, simply because they're emerging on the world stage. But I'm giving them a lot of credit for being sane. And I don't know if Xi Jinping is sane. I honestly don't know.
I was going to ask you that. I mean, you're giving a lot of credit where I don't know if credit's due.
I agree. I don't know if it's due either.
So we shall see. Paul, correct us if my bad. Snap planning 20%, layoffs not 20K. Well, either way, it's not a happy time. And my thoughts in the tech easy money to keep things floating along has dried up. Not only because rates have risen, but because of there just isn't the slush fund of money chasing these unicorns, shall we call it?
Yeah, it's interesting. It's not Citrix. Is it Citrix? It might be Citrix. There's a big tech company going private. Okay, and it's next week. and a bunch of corporate debt is going to be offered out, like a huge tranche of it is going to be offered out to pay for the company going private. Watch that release. Now, it's not tomorrow, so it's okay that I forgot what it is. But I mean, they're going to debt market at a really bad time. And it'll be really interesting to see the level of subscription for that as to whether it's high, low, or they have to change the rates or what. Because, well, that could be very, very ugly. Very, very ugly.
All right. Well, there you go.
All right, guys.
All right. Back on Thursday, Bob?
I will be back, barring, I don't know, a hurricane, I guess.
I don't see any on the horizon.
We're at like a 70-year record for consecutive days with no named storms.
So there you go.
I
Hopefully
keep
they won't.
knocking on wood to keep that going. That's, by the way, there's no, last thing, and then I'm going to go. There's no hurricane risk priced into crude oil right now at all.
No, there is not.
At all. So, anyway. All right,
All
guys.
right.
Cheers, everybody.
With that, I'll talk to you later, Bob. Thank you.
See you.
Okay. Is everybody still here? Hope you found that interesting. Yeah, we always like when Bob is on to enlighten us from his perspective. What we came down today, a nice 111 basis point drop in the S&P, hitting the first target from the Head and Shoulders. So, we had the little channel pattern. I gave the level I was watching, 40.35. We broke down with momentum. I think everybody should be able to spot momentum bars at this point. Hello, Arabio. So we got that coming back down. Nice little divergence. Return, remember, end of the morning, hit up that 15-minute rotation zone, rotation down. You got a nice little divergence. You can see it easier on, you can't actually see it easier on the 1 hour. You can see it on the 15-minute higher low in the RSI. Then we do have, this is what I will be watching, even though it's shorter term, a close above 4,450. We have another clear path move to the upside, so we could get a little corrective pattern with the end of month. That's the only thing I'm watching to the upside, and that would be for a short little bounce play, only to possibly kiss the channel goodbye. So again, we're channel came up, the flag pattern, little potential short here, another short pattern here, and then putting in this move right below that first target. So that's the only thing I'm watching to the bullish side. If we roll over, next minor target 39.54 from a harmonic standpoint, that's very minor. 39.25, more significant based off the head and shoulders pattern. And then major, we actually closed. Let's see where we closed. We pretty much closed right at that 50% retracement level. So we start rolling over there, the next major target between the head and shoulders and the harmonic levels would be 38.99 to 38.86. And that close below 38.89 favors a retest of the low area. So that's really it. Again, as I answered before, the reason we have the 50 and we use the 50 EMA, not SMA, exponential moving average, not simpler, because it generally is key resistance or support. And it's not a hard line, it's an area. Just like the 200 is not a hard line, even though it turned into a hard line here. It's an area. Again, area here for the area there, area here. Went through it. This was not this was, I just consider a chop back and forth, but now it's an area. So if we did get a more substantial rally, that's an area I would watch for, especially with the declining rotation zone. NASDAQ, First target hit on the head and shoulders, dipping through the harmonic. Pretty much the same story with the NASDAQ. Potential double bottom, 12,395.75. Targets the upside, 12,460, 12,490, 12,522 to potentially kiss the flag goodbye into a clear path move up there. So keep that in mind. There's pretty hefty resistance, so just above this peak. So I would actually want it to get above 12,404.75 on a closing basis to really start to trigger it. I am new to the stock market, and you're down $10. Well, then you're not down that much. I don't know your account size. What do you mean? You can learn some proper analysis. That's the only way we can help. And always manage your risk. Risk first. Dow, almost a second target hit. Second target 31,569 with the short-term harmonic 31,547. So if we do roll over tonight, that's what I'm watching for. Then 31,557 to the downside. To the upside again. Little mini double. This is valid. 31,909. 32,033, 32,094, roughly 32,157. That's the only thing I'm watching to the upside. Sound like a broken record. Other than that, even on stronger rallies, just watch the on any stronger rallies in the indices, watch the closer to the upside of the 4-hour rotation zone that's going to keep declining, and keep an eye on the lower end of the daily on any stronger rallies. Russell still hasn't hit the first target, or to 50%, 1840, and then 1807. By the way, the Russell, this is not valid for a double, but there's a pretty key level right around about 1864 to watch for on a potential breakout move. I'm just going to get through these quickly. The DAX, and not a great pattern there, but above 12,964 going in the end of the month. Could watch for a retracement pattern. And the main area of the retracement I'd be watching is around 13,000. Notes. I changed the levels just back to the levels for the head and shoulders. Still no close to stopping at that pattern 116.24.5, but not yet. Nothing really going on there, for at least from my perspective. Aggressive buy setup would be above today's high, but it'd be slamming into the rotation zone. Crude, by the way, the stop pattern, because you always got to keep in mind with the stops, the stop pattern 89.23. Still, oops, didn't mean to hit that button. So that's where we sit. I saw we got a couple stop requests. Let me just get through a couple other things. Bitcoin, nothing much. Remember, still expecting 18,523 to the lows. We're testing the rotation zone. Going to give it the benefit of the doubt with month end tomorrow, and then I'll be more targeting the breakdown play below this 19.5 level where we're stalling now. Tesla, triggering that double. Looks like it just eked out the close below the 50. So anything on any rallies would be a short opportunity because we have the probabilities now to the downside. 262, 253, 245. So this I'm going to be watching for a pop and then a rollover move in that. Apple, and I saw you with Zim. I'll get to that in a second. Apple, second target hit on the head and shoulders. Still 155.58. Might not hit it tomorrow with month end, but key resistance now with the 4-hour rotation zone 162.49. Minor resistance coming in at the old target about 161. So on any rally, I'd be focused on the 4-hour rotation zone for another rollover play. What else? Zim. I know nothing about Zim. Looks like I was asked about it a long time ago. I mean, that's just an ugly, ugly chart still. And remember, I know you cited P to E. This P to E is not strong yet, AB. Okay, this could flip to negative again at any moment. Then it's zero. I have to say it's zero then. This, you can say, here, look at the PE, it's really good. No, this is not really good because it's still hovering around the could be zero again. And if you just look at this chart, don't get sucked in. That's why you got to combine stuff and use fundamentals. You got to do more examination. I have not done an in-depth look at Zim, but this is why I can look at that and look at the chart and say this is not a pretty chart. And we closed below the 62.5. You know what that favors. I'm watching now a return to at least this 21.33. Just want to see something here. That was ugly, but yeah, I'm just curious. This is more for my, again, sometimes I do Mike curiosity. This is a Mike curiosity. I want to see where the second, oh. So break, extended head and shoulders on a weekly basis. Shoulder, head, shoulder, break. Retest the neckline. Let's sell the rallies in this sucker. Not only with the close below the 62.5, but you have the head and shoulders pattern. So I'm watching down here for targets. That's from a technical perspective. Fundamentally, yeah, you can cite the PE ratio. I think you can put in a lower PE ratio, but look, that can go to below zero again. Then it's infinite PE because if they have no earnings, you still got the price of stock. If you have no earnings, you got an infinite PE ratio, which, What else do we want? NVIDIA. Then I'm going to wrap this up. I like to keep it. NVIDIA, you not much, unless you're trying to day trade these things. Look, the double never triggered. That's why you wait for the trigger. And rolled over, broke the support with the momentum, first target hit. You know, if you get a month end pop, it would be above 155, above 155. I mean, major resistance is now back up at 160. If you get any play, I'd be watching this breakdown zone for any, if you did get an end of month pop. 158, that would be a, but why? I hate trying to play these things to the bullish. We've gone through this. Sector bearish. This is bearish. I'd rather wait for the rally and then look for shorts again. That's where we sit, and both with the 62.5 and this pattern, we should easily see 147s, if not 142s, 143s. Not much, but if you're going to try to play something the upside, I'd be watching this 1 hour rotation zone for going into tomorrow morning. And then it'll be a rollover play. If you're only trading from the bear side, you want to set up another short-term play, I'd be watching upwards to this 158 to 160 for a potential reversal. And I have to cover both sides because you know people are still trying to, I know we got a bunch of people in here playing it to the downside, which is you're playing with the probabilities. We still have people trying to eke out something to the upside. Go with something stronger. You're welcome, AB. And yes, I know you are short, Paul. So that's where I'd be looking. The way I time the time frames together, you got the breakout zone. You do have a clear path move up here. You got the breakdown zone. The end of the clear path is technically 158.86. I'd be watching the top of the 1 hour rotation zone converging because it's going to keep getting brought down even on a rally. And on a rally and any pause, I'd be watching for the 8 to catch up on the 4 hour for another rollover play. That's how I put the analysis together. All right. Let's see what I don't consider myself to be a good trader, but I listen to my instincts. I would be the worst trader ever. Just letting newer people know that TA and risk management are the keys to success. Yes. And I'm going to stress something. Even as you're mastering or becoming better at technical analysis, risk management is key. Again, we point out there is no magic bullet that you're going to get all winning trades. It does not exist. There's no such thing. It's why, you know what? Could that crude stop out? Yeah. Could you get that head and shoulder, inverse head and shoulders on the bond stop out? Yeah. Or the notes stop out? Yeah. There's no illusion here that you don't have stops and you don't take losses. They exist. Even as Bob said, when I was running the service, 8 out of 9 winners, and some people just jumped in on the one losing trade. Because that's human nature. Oh, that one looks good. I like ketchup, not chili. I'll take that trade. You don't rely on your gut. Don't rely on what you think, because you know what? You got to rely on sane money management and proper technical analysis. So there you go. And that's what keeps you afloat, and proper risk management keeps you afloat for the long term while you're getting better and better at trading. Why are there a lot of people buying BBBY? Because it's a friggin' meme stock. And now you have people trapped. Look, you have people trapped. They're trying to juice this thing back up. Look, I'm long from up here. Not me, but I'm long from up here. All right, I've turned into diamond hands. Instead of taking a friggin' loss because you chased vertical up, vertical down, this company's going to go into restructuring or bankruptcy at some point, unless like it trades. I don't even see a buyout at this point, even for $1, because they got too much. They're just horribly mismanaged. Why are people still buying it? Because they're leveraging down. They're hoping that, okay, let's say I bought at 20. Now let's say I buy a whole bunch more at 10. Look, my average cost is 15. All it's got to do is get back to 15 for me to break even. But you know what's funny? People do that, then it gets to 15, they're like, oh, I could be making money now. All right, well, maybe it'll get to 16 and I can turn this into a profit. Then it goes back to 12. They're like, no, I want my money back. Oh. So that's why people are still playing this garbage. Garbage. That's why we don't do this stuff. There's no quick get rich quick. There's get rich lucky. There's get rich. I put everything in here and wrote it up, and I made $100,000 and I lucked out. But you do that long term, I've seen more people go broke and give it all back than continue to make that money. There's no get rich quick. There's a get rich quicker. Again, proper money management, proper analysis. Get rich quicker, not get rich quick. There's a huge difference between get rich quicker and get rich quick. These are people walking up to the plate and trying to hit a home run every time they're up there, or trying to throw a bomb for a touchdown every snap. It doesn't work. I don't care what your sport is. You're not going to do that. You're not going to hit the half-point shot every shot. You take the half-point shot every shot, you're going to ruin your team. But those low float IPOs, you're going to make all this money. Oh, I can't wait till that goes away. It'll come back in another form. Look at all this NFT garbage. Look at all that. I got asked a year ago. Because a lot of people know I do this around here. And I got asked, I go into grocery store or something else. Oh, are you covering NFTs yet? Oh, man, NFTs. Where are NFTs now? Bunch of garbage. It's like these meme stocks. It's these people. It's why I have a stonks flag. It's going to be a great reminder. But the stonks! Learn to invest. Learn to trade with some sensibility. But that's not what these are not channels that get these 100,000 subscribers. Oh, buy BBY, buy it. It's going, oh crap, hold it. Screw you. Hey, Knots Industry. You need to make a financial comedy show. Who would tune in? To John's laughing. Thank you, Mike. Always making my day better. Is it the weekend already? It's not the weekend already. I wish. BBY will be back below 4. Yes, Coco. And that does not mean you get every trade right. You don't get every trade right. There's no such thing. You manage your risk. You take your losses. You don't turn into diamond hands. Oh, wait, it went against me. Now I'm diamond hands because I don't want to take a loss of a trade I should have never been in. That's why people show up on this channel. What do? I bought it at 26. It's now at 12. What do? You don't get in that position in the first place. Now that you're in it, learn your lesson. And take your loss and move on. And learn. Otherwise, I'm not the channel for you. I'm not the channel for a lot of people, I guess. Although we do have... We're closing in on 5,500 subscribers. So it's got to be some smart people out there. Not because of me, because we try to call it as it is. I wish more people would do that. There are some good channels out there. I did take a breath, Coco. I just get animated. You're welcome, Dr. M. So, all right, that's a good note to end this on. Depending on how many people I lost with the rant. I will talk to everyone tomorrow morning. Passion. Frey, double top, still valid. Then I'm calling it a day. That's it. No. Double top is not still valid. But the gap play on any reversal, I'd be really careful now with cycles at the top. Really careful and weekly rolling over. You have a double gap play now. So I'll be watching for any breakdown on this. Any breakdown. Especially back below about 1325. You got this double. And then you got another double from the same thing I talked about. But no, the overall major double top's not in play. So you only have the gaps to the downside. With that, I'm wrapping it up. Talk to everyone later. Everyone have a wonderful evening. Thank you for tuning in. Bye for now.